How to invest in U.S. stocks from anywhere in the world. For many people around the world, investing in U.S. stocks feels impossible. They think you need to live in America, or earn in dollars, or have insider knowledge. But the truth is simpler. Today, anyone from almost anywhere in the world can invest in U.S. companies, and that access has quietly changed how wealth is built globally. Let's break it down. The U.S. stock market is home to some of the strongest companies on earth. Businesses that operate globally, earn in multiple currencies, and dominate their industries. When you invest in U.S. stocks, you're not just investing in America. You're investing in Apple phones sold worldwide, Microsoft software used everywhere, and companies that shape the global economy. That's why investors from all over the world are drawn to U.S. markets. Now, the biggest myth is this: you need to be rich to invest in U.S. stocks. You don't. You don't need millions. You don't even need thousands. What you need is access and discipline. Thanks to modern investing platforms, people can now open international brokerage accounts, fund them digitally, and buy U.S. stocks from their phones. Some platforms allow you to buy fractional shares. That means you don't need to buy one full expensive stock. You can own a small piece and still participate in its growth. The next myth is fear. Many people avoid investing because they don't understand it. They think it's gambling, or too risky, or only for experts. But investing isn't about guessing prices. It's about ownership. When you buy a stock, you're buying a piece of a business. And over time, good businesses tend to grow. Now let's talk about strategy. Most beginners make the same mistake. They chase fast money. They jump from stock to stock. They react to news and panic. That's not investing. That's emotion. Smart investors focus on long-term thinking. They don't ask, will this stock go up tomorrow? They ask, will this business still matter in 10 years? That mindset changes everything. Another important factor is currency. For people outside the U.S., investing in U.S. stocks can also protect value. When local currencies weaken, assets priced in stronger currencies can help balance that risk. This doesn't mean there are no risks. Markets go up and down. Companies rise and fall. But spreading investments across strong companies and sectors reduces the impact of any single failure. This is where ETFs come in. An ETF allows you to invest in many companies at once with a single purchase. Instead of picking individual winners, you invest in the market as a whole. It's simple, it's diversified, and it's beginner-friendly. Now let's talk about patience. Investing from anywhere in the world doesn't require constant attention. In fact, the less emotional you are, the better your results often become. Wealth is rarely built by reacting daily. It's built by staying consistent over years. A small amount invested regularly can outperform large amounts invested emotionally. This is why time matters more than timing. You don't need to catch the perfect moment. You need to stay invested long enough. One more thing people overlook is education. You don't need to know everything, but you need to understand the basics: what you own, why you own it, and how long you plan to hold it. That clarity protects you during market downturns, because markets will fall sometimes. That's normal. What separates successful investors from frustrated ones is not intelligence, it's behavior. So yes, you can invest in U.S. stocks from almost anywhere in the world. But access alone doesn't build wealth. Consistency does, patience does, and long-term thinking does. The goal isn't to get rich fast. The goal is to build something that lasts. Because when you invest the right way, money starts working for you even while you sleep. Subscribe to Wealth Bolt for more educational financial tips.